Good evening, everyone. Thank you for joining us this evening. Usually our Telfed CEO, Doron Klein, would be giving the short Telfed presentation. He's currently in the States visiting family. So I'm just going to play a short presentation by Doron.
Shalom, everyone. Great to be with you. And we're going to start with a short presentation about Telfed. You need to know about the organization. It's here to help you, to help yourselves. So I'm going to start with sharing my screen. And together we'll go through the Telfed presentation. Here we go. So Telfed, that's our nickname. It's from Tel Aviv Federation, because in 1948, when Telfed was established along with the State of Israel, our offices were in Tel Aviv. So that's how we got that nickname. Officially, we were the South African Zionist Federation, Israel. We were founded by the South African Zionist Federation in 1948 to look after the 800 Machal soldiers who came to volunteer here in Israel in the War of Independence. Today, we are totally independent. So although that still remains our official name, and we're very proud of it, it's our history, we go by our nickname, Telfed, Tel Aviv Federation, which also reminds us of our historical function in Tel Aviv all those years ago, looking after those 800 Machal soldiers. And since 1948, we've been busy in Israel looking after the absorption of South African Olim. So there are three main pillars to the organization that you can see here: Klita, social welfare and assistance, and our community. So let's look at each one of those three pillars. So here comes our mission statement: to promote the absorption and quality of life of Southern Africans and Australians in Israel. So obviously absorption, that's what we hear about. Quality of life, well, a big difference between quality of life and standard of living. We want our Olim to feel what it is to live as a Jew in the Jewish homeland. That is quality of life that you can't get anywhere else. And we also help in the Australian Olim these days. For the last decade, we've been dealing with Australian Olim as well, and not only Southern Africans. And about 30% of our Australian Olim are actually ex-South Africans. So it makes sense why we help in them too. And we want to see our Olim participate and contribute to Israeli society. We're not here to keep them in a bubble. We're here to ensure that what each one of our Olim bring with them, their morals, their culture, their religious outlook, everything that they bring, we're sure that Israeli society can benefit from that. And now the last slide relates to the different aspects of the organization. So we'll go through this quickly. First of all, Klita means absorption, and that's been the heart of Telfed since 1948. The Klita starts already in South Africa, where we really do the pre-Aliyah planning for a smooth Klita. If you don't have a smooth Klita, Aliyah doesn't help. Aliyah can be the easiest part, the bureaucratic part. That's the Klita, it's the absorption that counts. You can see that last year we had 509 Olim. That doesn't include those that changed their status here in Israel. With those that changed their status, we are at 550 Olim in 2021, the largest number of Olim from South Africa since 1994. And Australia, 98, and with those that changed status in Israel, about 120. So pre-Aliyah counseling as much as possible to get people prepared for their Klita. And then you can see here's a lovely picture being welcomed home. That connects here to our volunteers. We have 250 volunteers all over the country. Certainly, the earlier that people are in touch with our volunteers, the better. And those regional volunteers are there to welcome in the new Olim, make sure that the absorption is going smoothly. But also pre-Aliyah, those volunteers are there to offer important information about the region where a potential Olim wants to go and live. So we always encourage people to be in touch with our regional committee volunteers as early as possible in the game, basically as soon as they've decided to make Aliyah. Our Klita advisor, her name is Daniela, and certainly we want our Olim to be in touch with Daniela on a regular basis in order to make sure that the new Olim are accessing all their benefits. Lone soldiers, a special division here for lone soldiers. You can see 110 from South Africa, 70 from Australia, and helping the lone soldiers pre-induction while they're in the army. Certainly after they get out of the army, it's a big challenge to get absorbed into Israeli society and deal with an Israeli landlord, for example. You don't have to do that while you're in the army. So a lot of help when they've finished their service as well. And there's financial help too, as well as guidance. And employment. We have a full-time employment advisor as well as a career counselor. Again, as early as possible to make contact with them before Aliyah. That's always our advice. And certainly once people have arrived, to access that free counseling, seminars, understanding the Israeli workforce and how to enter the work market, and mentors. We have a group of mentors. These are volunteers in their profession who can help the new Olim enter the workforce. So again, be in touch with our employment advisor. Her name is Yael. Michal is our career counselor, specifically for those who need to change careers. And the earlier one is in touch with them, the better. So that's the Klita pillar. The next pillar is social welfare and assistance. Telfed gives over 500 scholarships every year. That's our PRUS scholarship, which is 3 hours of community service a week. The students do that community service and they get a 6,000 shekel scholarship. And New Olim, you guys are eligible to receive a student who can come help you with your absorption. Can be a big brother, big sister to the kids, can help the adults, can help elderly, can help people with special needs. And those PRUS students are also available to help people navigate Israeli bureaucracy. If you actually want somebody to translate documents for you and actually go with you to the Israeli government offices, you can touch base with the PRUS students. You can get their details from Daniela, and they can accompany you to the government offices and help translate for you. That does come with a fee. That's a 60 shekels per hour fee, which goes directly to the students to help the students get some more extra pocket money for their studies. There are also scholarships based on financial need that can be up to another 4,500 shekels. The students can get both. So they get PRUS and financial need scholarships. Our students can get over 10,000 shekel scholarships per year from Telfed. So no matter what age you are, if you're planning on going to study, please apply for the Telfed scholarships. SASSI is South African studying in Israel, and that's for students who have yet to make the decision whether they want to make Aliyah or not. So even though they're tourists, we see that as a great Aliyah promotion model to bring South African students to come and study in Israel, and they can also join the PRUS program under the SASSI umbrella, South African Studying in Israel, and get the 6,000 shekel scholarship. Financial assistance, hopefully none of you will need that, but we are the safety net to 450 people every month, making sure they're eating properly and making sure they have a roof over their head. And if they need counseling, they turn to our social worker. We have a full-time social worker, Ariella. And again, you don't have to turn to Ariella only for financial need. If you feel you're going through a tough time, you need to speak to a social worker, please contact Ariella and she will give you short-term counseling. And if you need something longer than that, she'll point you in the right direction. And you see the last section here, our rented apartments. It's a different color to the other two because it's also part of Klita, because we provide 105 apartments at subsidized rentals. We subsidize the rent for New Olim by 25% approximately below market rates. But it's in this column because 70% of the rental income goes to help the needy. So that's why it's in the social welfare column. So it's good. The people who rent our apartments know that 70% of their rent that they pay goes to help the needy. It makes you feel better about paying rent, and the rent is below market rates, approximately 25% below market rates. Priority to New Olim. It's a wonderful community. And again, the earlier one applies for that, the better the chances are, because there's always a waiting list to get into the Telfed apartments. There are 30 in Ranana and 75 in Tel Aviv. And here again, the last pillar is our community. We spoke about the regional committees, 24 regional committees all over the country to give Olim information about the region and to help them with their absorption. Here you can see welcome packages. Aviva, who's here in the picture, she's in charge of volunteerism. And we encourage people that as soon as they are absorbed into Israeli society, that they come and they can come and volunteer at Telfed. Next are our events. You can see we have about approximately one event a week, which is fantastic. You can join our events. A lot of the events now are via Zoom. So, you know, you can take part in them no matter where you are. And a lot of participants, worthwhile. You can learn a lot from those events. You can meet many new people, veteran Olim, new Olim. Really encourage you all to participate in the events. And again, people can participate in those events even before they've made Aliyah. No matter where you are in the world, you can participate in the Zoom events. And hopefully we'll go back to as many as face-to-face events as possible as soon as we can. And lastly, our community news. If you're on Facebook, please like our Facebook page. There's about 4,500 people. There's a lot of information, a lot of knowledge there. Instagram, join it. Our newsletter, if we have your email address, you'll get our newsletter once a month. All the updates, all the news, important news there. Follow that newsletter. The Telfed website, a huge amount of information there for you. Please go into the website, frequently ask questions. A lot of stuff that you can learn from the website. And a Telfed magazine that goes out on Pesach and Rosh Hashanah that also tells about the amazing achievements of our community here in Israel. So there you have it. In a nutshell, the Telfed organization. I hope you understand now more about what we do. And as I said, we're here to help the Olim, to help themselves and to have a smooth absorption into Israeli society and to participate and contribute to Israeli society. Thank you and shalom.
A very good evening to everybody. My name is Teddy Saitovitz. Welcome to this evening's event, Telfed event with Michael Kransdorff. During the event, you will all be muted, and if you do have any questions, please send them via the chat, and they will be monitored, and Michael will attempt to answer them during his webinar. At the end of the webinar, there will be some time that you can actually also ask your questions in person. So again, a warm welcome, Michael Kransdorff. Michael is a Harvard-educated tax practitioner and financial consultant. He is South African chartered accountant with a master's in taxation. His work experience in banking and investments has been in South Africa and London. He was also a senior lecturer at the University of the Witwatersrand. In addition to him crunching numbers, in his spare time, Michael is a passionate advocate for Israel and has taken on the task of heading up the JNF in South Africa. A warm welcome, Michael. Thank you. And we look forward to hearing from you about this complicated tax residency status issue and look forward to hearing.
Thank you so much for having me tonight. To Telfed, you guys do such an amazing job for new Olim in Israel, for South African Olim, and it's a real privilege to be at your event tonight. I've got my colleague Laura Sassoon with me. She'll be monitoring the chat and for questions, and we'll answer them at the end. I'm just going to start by sharing my screen. I have a presentation. And then we can get going. Can everybody see the screen? Is it coming through clearly? Great. So I think the most important thing to understand is that changing your citizenship, becoming an Ole, or even getting rid of your South African passport does not automatically change your tax status. It doesn't change your tax residency, and that's something that most people don't actually know. So it's very possible for a person to be a citizen of Israel, but still possibly tax resident in South Africa, and they may or may not have financially emigrated from South Africa. And as a consequence of this, many Olim, many people that have immigrated from South Africa didn't actually know about this need to formally change your tax residency status. And many also didn't financially emigrate. And one of the sort of, and this is a serious oversight, that could have serious financial implications, additional taxes, interest, penalties, and we'll get into all of that a little bit later. And why it's important now is many people have, left South Africa for many years and not officially emigrated or changed their tax residency status. And why things have changed is that there's now this common reporting standards and the sharing of financial information by financial institutions around the world. And what that means is that SARS now has access to people's foreign income, which they never had before. And this gives them an opportunity to go after those taxpayers that have left the country, but have not correctly changed their tax status. So we'll go into more detail about all of this, but the good news is that the situation can still be rectified. There is still opportunities to rectify the situation. We're waiting to see what comes out in the budget speech on Wednesday and whether some of that may change. But as things currently stand, there is still the opportunity to fix the situation, and we'll take you through how to do that. So before we get into the meat of the talk, I think I just want to deal with one of the myths that comes up all the time. The first thing people ask us about is always, do they need to financially immigrate? What's the story with financial immigration? And there's been a major change to South Africa's financial immigration infrastructure since the 1st of March 2021. So effectively, the Reserve Bank has overhauled financial immigration. In the past, financial immigration was about informing the Reserve Bank through your bank that you were no longer resident for exchange control purposes in South Africa. This was done away with on the 1st of March 2021. And now what they've done is they've tied financial immigration effectively to your tax residency status. So you no longer have to submit the form at your bank, but you now actually have to officially change your tax residency status with SARS. You can do it through your annual return, or there's a special application that you can make to SARS to change your tax residency status. And there's accompanying supporting documentation that's needed to justify why your tax residency status has in fact changed. People often used to ask, what was the major advantage of financial immigration? So with the relaxation of exchange control, it wasn't so much financial, but the big advantage before 2001 was that if you financially immigrated, you could withdraw your retirement savings before the age of 55. So financially immigrating allowed you to withdraw your retirement savings. In sort of research we've seen and discussions with some financial advisors abroad, we found that a surprising number of South Africans who have immigrated have actually not withdrawn their retirement savings. Most have kept their retirement savings in South Africa, which is quite surprising. So now that financial immigration has been done away with, and financial immigration has been tied to your tax residency status, they've now put in place a new law which says that you have to wait 3 years. You have to be non-resident of South Africa for 3 years before you're able to withdraw your retirement savings. So that's really the major implication of this change in financial immigration. But for all intents and purposes, financial immigration is no longer applicable. And all that matters is that you need to change your tax residency status. So what we're going to cover in tonight's talk is how South Africa taxes its residents, giving some explanation of that. Then we're going to look at the implications of ceasing to be a South African tax resident. There are serious tax consequences for ceasing to be a South African tax resident. Unfortunately, it doesn't come for free. And many people obviously haven't formally done this. And there are consequences for not changing your tax status. And we're also going to look at some of the benefits of actually officially immigrating, the tax immigrating. There are actually a lot of advantages. And finally, at the end, save the best for last, we'll take you through how, if you haven't formally changed your tax status, the situation can be rectified. So, how does South Africa tax its residents, I guess, is the first question. And what's important to understand is that South Africa, like many countries, Israel is the same, operates a residence-based system of taxation. So what does that mean? It means if you meet the definition of a South African tax resident, you pay tax on your worldwide income. You don't only pay tax on your South African income, you pay tax on all of your income, whether it be earned in Israel or in Switzerland or in Luxembourg or the Isle of Man. You have to pay tax on your worldwide income. The benefit of being non-resident is that if you're non-resident, you only pay tax on your South African source income. South Africa employs two types of tests to see if somebody's resident. There are two ways that South Africa sort of traps you in their tax net. The first is called ordinarily resident. And this is, not clearly defined in the Act, but it's more about, according to case law, where your real home is, the place that you return from your wanderings. And it's about the country that you have a deep connection to. For most people that have grown up in South Africa, that have gone to school, have got work, jobs, there's a very strong bond to South Africa, and it's very hard to prove that you break that ordinary residence. So for most people, South African or Lim, that are making Aliyah, they would probably be ordinarily resident in South Africa. The second way that South Africa traps you is even if South Africa is not your real home, but if you spend a considerable amount of time in the Republic, if you spend 91 days in the current year and 91 days in the previous 5 tax years, so almost over 6 years, if you spend in 91 days every year for 6 years, and in total 915 days in the previous 5 years, you could be deemed to be South African tax resident. So these are two tests. It's slightly different to Israel. Both operate, so you can be caught by both. It's not one or the other. Both. If you're not ordinary resident, you can still be caught by spending too much time in the Republic, and even if you don't spend time in the Republic, you can still be caught by being ordinarily resident. So, how does one cease to be a South African tax resident? So, if you're born in South Africa, you're ordinary resident in South Africa, or you spend a lot of time here, how do you cut your ties with South Africa? How do you get out of that tax net and no longer get taxed in South Africa on your worldwide income, which is something a lot of people want to achieve? So the truth is that there are various ways that you can cease to be South African tax resident. The first is that you stop being ordinarily resident. So you've got to cut your social and economic ties with South Africa. This is quite challenging. There's quite a high burden of proof for you to show that you are that South Africa is no longer your real home. You'd probably have to, cut your ties, sell your residence in South Africa, show that somewhere else is your real home, for example. So that's quite a high burden of proof. And the second is slightly more simple. You just have to make sure that you don't meet the minimum days to spend in the Republic. So you got to do both. So. But there is a third way, which is fortunately less onerous, to be honest, and that's through what we call the tiebreaker clause in the double tax agreement between Israel and South Africa. So Israel signed quite a favorable double tax agreement with South Africa back in the 60s or 70s. And there's a clause that basically says, for double tax, you can't be tax resident in 2 places. We have to choose between one of them. The double tax agreement says you got to choose between either South Africa or Israel to be tax resident. It has certain tests that determine where you tax resident. And these tests are very favorably loaded towards Israel. So as long as you are Israeli tax resident, as long as you meet the definition of Israeli tax resident in Israel, you have a permanent home available to you in Israel. Doesn't mean you have to own the home. You may be able to rent. A long-term lease is sufficient. But if you have a permanent home available where you live in Israel, and you formally made Aliyah, it's quite simple to sort of cut your tax residency status in South Africa. And that, even if you maintain quite a strong bond with South Africa. So you can even still maintain your house in South Africa. If you meet these 3 criteria in terms of the double tax agreement, you can cut your South African tax residency status. The key, though, is that it's all very well to have a theoretical discussion about where you tax resident, but you need to actually formally, officially tell SARS that your tax residency status has changed. That is a requirement that you need to formally report on your tax return or submit a declaration to SARS. And in that declaration, it's not enough just to tell them, you have to justify in terms of the law why you're no longer a tax resident with supporting evidence. So what happens when you exit South Africa? What happens? So, they're not going to let you go easily, obviously. So there is what's called an exit charge that people who cease to be South African tax resident need to pay. And how the South African revenue authorities do that is they make a deemed disposal on the day before you tax emigrate, on the day before you change your tax status, you are deemed to have sold all of your assets, and you have to pay capital gains tax on that disposal, on your worldwide assets. This can be quite significant, especially if people have a lot of offshore assets. This can be a serious charge. So you work out the capital gain on those worldwide assets on the day before you cease to be South African tax resident. At their market value, you subtract the cost and you work out the capital gain, and that should be included in your final South African tax return, and you should pay tax on that. Why this is so harsh is that you haven't actually disposed of those assets, but you are deemed to have disposed of them, and so you have to pay tax on them, and that could create liquidity constraints because you haven't actually disposed of the assets. You may still want to hold them. It is quite harsh. And there are only a few assets really that are exempt from this. The list is sort of personal use assets. So your furniture, your art is a big one that's exempt, your car, things like that. Cash, there's no capital gain on cash, even foreign cash, which is useful. Immovable property situated in South Africa. So any fixed property that you might have in South Africa, you wouldn't have had to pay the exit charge on. And then it's a limited case for most people, but sort of share incentive schemes from your employment is another asset that you wouldn't need to pay the exit charge on. But all other assets, you would be required to pay the exit charge. And not paying the exit charge is an offense. It's to be honest, it's tax evasion. If you haven't done it and you get caught, you are subject to penalties and interest on that amount. So it is quite serious. It's and it's sort of something that people were required to disclose in their tax return and to do. So the problem is that when most people emigrated or made aliyah, not only to Israel, but to other countries as well, most people didn't change their tax status. Most people didn't financially emigrate. They sort of flew under the radar. And by doing that, they avoided paying this exit charge. So they sort of managed to avoid doing that illegally, but they did manage to do that. The problem is what's happened is that in the last few years, we've had a very big change in international tax. We had the passing of what's called the Common Reporting Standards, which is basically the global sharing of information. So financial institutions around the world, in Israel, in the Isle of Man, in almost every country you can think of. I mean, I used to joke that there isn't a country that you would want to put your money in that isn't part of the CRS these days. It's only a few like really dodgy. So Liberia, I think, is one of the few countries that hasn't signed up to CRS, but you wouldn't want to put your money there anyway. They are sharing financial information. And what that means is that SARS now has a lot of information on the foreign income of South Africans, ex-South Africans, etc. And so even though you may have immigrated to Israel, if your bank is sharing your financial information about you, knowing that you're South African or ex-South African, with the South African tax authorities, SARS will have that information, and they will see that you've submitted nil returns, or you haven't submitted tax returns in South Africa for many years since you left. And they will say, well, why have we got income for you abroad, but you haven't submitted tax returns? And they are able to automatically raise assessments based on that foreign income. And because you haven't changed your tax status, you're still on the system as South African tax resident. You should be paying tax on your worldwide income, including your Israeli income or foreign interest income or foreign passive income. And SARS, because you haven't changed your status, have the right to sort of raise assessments with penalties and interest for those years that you haven't submitted tax returns since you left. And that can be quite unpleasant. And if you want to challenge those and say, well, actually, I've actually changed my tax status, I'm no longer South African tax resident, they will say, well, where's the exit charge? Why didn't you pay the exit charge when you left? And they might, and they're able to raise an assessment for that exit charge. And the risk is that they raise that assessment for the exit charge, not at your historic asset base when you left, but at your current asset base, which may today be higher, hopefully higher than it was when you left the country. So, I think what I'm trying to say is that there are quite serious financial consequences for being caught out here. And just because for the last 5 years or the last 10 years, you've been able to go under the radar and you haven't had any issues, I really do want to say that I don't think that that's going to continue. And SARS does now have access to the information, and foreign taxpayers are, people that have left the country and not paid what was due. It's a big political issue here. And there's people we've spoken to in the National Treasury and SARS, it's a really easy target for them to go after these people, and it's politically, very popular. So what are the benefits of sort of coming clean and actually officially tax immigrating? So I would argue that those benefits are actually very significant. One is that you only now taxed on your South African source income and capital gains. So only if you have income that you're generating from South Africa would you be taxed only on that income, but your worldwide income would not be subject to tax in South Africa. And for people that are making aliyah and taking advantage of the 10-year tax holiday on foreign income that Israel offers, that's really nice, because if you have foreign income from a third jurisdiction, you're not paying income tax in South Africa on that foreign income, and you're not paying income tax in Israel on that foreign income. So you're basically able to generate that foreign income tax-free if you've done it in a tax haven, for example, for 10 years. So officially tax emigrating and becoming non-resident is a big advantage, that you all that foreign income is now out of the South African tax net. Also, the South African Tax Act offers generous exemptions for non-residents. So there's actually quite a lot of advantages to being non-residents, even if you have South African source income. Dividends tax, for example, is exempt. There's some interest exemptions if you're an interest in the Republic as a non-resident. And capital gains, there's actually limited amounts of capital gains on shares. If you sell shares, you don't have to pay capital gains tax, which is a big advantage if you're non-resident and you want to still have some South African assets. Another big advantage is that you're able to cash out of your South African retirement savings, potentially tax-free. So the South African-Israeli double tax agreement is particularly favorable in this regard. And, you know, historically, if you want to cash out of your retirement savings in South Africa, you taxed on that lump sum that you withdraw. If you below the age of 55, that tax can be quite high, at quite a high rate. You're penalized for withdrawing early, so you tax at quite a high tax rate. But because of the double tax agreement with Israel, South Africa actually doesn't have the right to tax that withdrawal of your savings, of your retirement savings. So that South Africa can't actually, if you're non-resident, when you withdraw your retirement savings, South Africa and Israeli tax resident, South Africa can't actually tax those savings. They're tax-free. And because of the 10-year tax holiday in Israel, it's unlikely that you would pay in those first 10 years tax on that non-Israeli, on that foreign, you know, South African source income. So there is a way for people to actually get their retirement savings out tax-free. And, you know, we're quite surprised that, and this is a loophole that the SARS is aware of. They tried to attack it last year in the budget, and that was actually knocked down. We're waiting to see what comes up this on Wednesday, if they're going to find a way to stop it. But what we found surprising is a lot of people living abroad, a lot of Olim, people living in London, etc., have actually not taken advantage of this and have not withdrawn their South African retirement savings. And yeah, we would certainly encourage that to take advantage of that loophole while it's still available. One last advantage to sort of officially tax immigrating is that if ever you receive inheritance from South Africa, your status is non-res. It doesn't, you know, SARS, when you get that inheritance, know that you're non-res and you can take the money out of the country. If you still registered as South African tax resident and you receive inheritance, that also opens up a whole can of worms. Where have you been? Why haven't you submitted tax returns on your worldwide income from that date? So if you are expecting to get inheritance from a South African source, I would certainly recommend correcting your tax status, your tax residency status before then. Otherwise, it's really a big balagan to sort of clear that up, and can often open you up to penalties and interest as well. So last but certainly not least is sort of, how do you rectify the situation if you're one of those many people that left South Africa, that made Aliyah, but you, for whatever reason, you didn't officially financially immigrate and you haven't actually changed your tax status? What can you do? The good news is that there is still an opportunity to fix the situation. You know, so before you get caught, there is an opportunity to sort of come clean and fix the situation. What you are able to do is that you're able to submit a declaration to SARS justifying why your tax status has changed, and which is quite fortunate, they allow you to backdate that. So you don't have to change your status today. If you made Aliyah 5 years ago, but you forgot to officially tax immigrate, you can actually backdate it. You can submit a declaration apologizing and saying that, and justifying why, you know, you actually, your tax status actually changed 5 years ago. You do need to, it's quite a technical document that needs to be written justifying in terms of the act and the double tax agreement with Israel, and also requires supporting documentation. So you will have to, one of the key things is to get a tax residency certificate from the Israeli tax authorities to show that they consider you, you know, tax resident in Israel. That's one of the key documents that you need to get. in order to make this declaration to SARS. They rely quite heavily on that document. And then in terms of the exit charge, unfortunately, you can't get away from the exit charge. It's something that you should have paid. But there is the voluntary disclosure program, which allows you to make a voluntary disclosure, go back, open up an old tax return, input the exit charge there, and the exit charge will be backdated doing this to the value of your assets when you made Aliyah, which hopefully would be much less than if you did it on your current assets, which are hopefully grown over time and would be significantly more. So that's a big saving, that you can go back and do it on your historic assets. There will be interest charged on the tax, but if you use the voluntary disclosure program, they do waive the penalties for non-disclosure. So that is a big advantage, that you don't have to pay the penalties, but there is interest charged on the fact that that your tax wasn't paid when it should have been. So in conclusion, I think, we'll open up to questions now, but, and there seem to be quite a lot of them, but in conclusion, this is a big issue. There are a lot of South Africans that have left the country, not only to Israel, that have not officially changed their tax residency status. This is a very political issue that's easy for SARS to attack. They now, with common reporting standards and the sharing of information, have much more information about your foreign earnings. And, it's really a matter of time before you get caught. So, we would recommend that there is an opportunity to change your tax residency status, to make the declaration, clean up your affairs here, pay the exit charge, and rectify the situation is sort of the advice that we would give. So I know it's been a bit of a whirlwind, and we've had quite a lot of questions. So I don't know if you
Marco, there are a lot of questions. Maybe you want to go through the chat and try and address some of them. That would be a good thing.
Okay, cool.
And then after that, if somebody wants to ask personally, they can do so as well.
Okay.
Are you able to see the questions on the chat?
Able to see them. Yeah, some of them are quite long. So someone asked, what if you made Aliyah 18 years ago and did not apply to retain your citizenship? How could SARS tax you if you're no longer a citizen? I think this applies to most Olim. Most people do not know the South African requirements. So I think the key thing to understand is that your tax residency status and citizenship are not connected. You can not be a citizen of South Africa, but still be tax resident. So the fact that you're no longer a citizen is not what's relevant. It's whether you are no longer registered as a tax resident in South Africa. So, if you haven't changed your tax status, the fact that you've made Aliyah, the Home Affairs doesn't talk to SARS. There's no communication between them. So you have an obligation to still report that change of tax status to SARS. Post 2001 is when residence-based tax came into being in South Africa. So if you made Aliyah before 2001, I think you wouldn't have a problem. But it's people that made Aliyah post 2001, post residence-based tax coming into South Africa, that you would have a problem. So 18 years. I don't know what date you made it, but 18 years is on the cusp. You'd have to check what date you made Aliyah. But if it was before 2001, I think you wouldn't have a problem. But anyone post 2001, when residence tax came into being in South Africa, would need to change their tax status and would be subject to the exit tax on ceasing to be South African tax resident. Somebody asked, what happens if you receive passive income in South Africa? Surely double taxation a return would still need to be filed in South Africa? That's a great question. So if you are non-resident, even if you're non-resident and you still receive South African source income, you have to still file a return in South Africa for that South African source income. It would depend on the nature of the income. There's a double tax agreement with Israel. We'd have to look at whether it's interest or dividends, etc. The rules are slightly different. Who has the taxing rights on that income? It would depend on the nature of the income. If it's profits from a business in South Africa, fixed property, rental income, we have to see what the nature of the income is to determine which country has the taxing rights. You can still get a credit for foreign taxes paid. So the good news is, even if you have to declare the income in both your Israeli and your South African tax return, you do get a credit in South Africa and in Israel as well, I believe, for foreign taxes paid. So if you pay taxes in Israel, or you pay taxes in South Africa on income and you have to declare that income in Israel as well, you are able to get a credit for those South African taxes paid. Somebody asked, what is the supporting evidence that you aren't tax resident in South Africa? That's a great question from Danette. So it depends on how you structure that declaration that you need to make to SARS, how you say you changed your tax status. The supporting document changes, but the most important thing is that tax residency certificate from Israel. If you can get a tax residency certificate from Israel that says when you became tax resident in Israel, that's a key piece of information that they need. You might have to submit proof that you've got a permanent home available in Israel as well, a lease agreement, for example, but it does just depend on your circumstances. We need to look at what makes you tax resident in Israel and what makes you not tax resident in South Africa actually is more the case. And based on that justification, we'd have to submit documents. But in most cases, it's always that Israeli tax residency certificate is key, and proof that you have a permanent home available in Israel are two things. And also your Aliyah visa to show that you sort of have made Aliyah will also be important. Brad,
Michael, somebody has asked you about the loophole about the retirement funds or something. I see. Is that something you're able to extend on?
Sure. Yeah. So, as I said before, generally, when you contribute to a retirement annuity or a pension or a provident fund in South Africa, you actually get a deduction, quite a generous deduction for that contribution. And the idea is one day when you retire, you take out the money and you pay tax on the money when you retire. If you withdraw early, if you're South African and you withdraw early, there's a penalty. The rate of tax that you pay on that withdrawal is normally quite high. There's a table that sets out what your rates are, but it's a high rate to penalize you for withdrawing early. If you change your tax residency status and you're no longer South African tax resident, now you're non-resident, you can withdraw that money early, and B, because of the double tax agreement with Israel, which was very fortunate for us, was structured in such a way that it gives Israel the exclusive rights to tax South African retirement savings. I don't know why it was negotiated like that. There are only a few double tax agreements in the world, 3 or 4 we looked at, about 4 or 5, I think. And Israel is actually the most favorable, where they negotiated that retirement, even though it's South African retirement savings that you got a deduction for in South Africa and you worked for in South Africa, it actually is not taxable in South Africa, but only Israel has the choice whether or not to tax that money because you're now tax resident of Israel. And because of the 10-year tax holiday, you don't have to pay tax on that. If you're in the tax holiday period for Israel, you wouldn't, it's foreign, it's South African source, it's foreign income. So you would be able to effectively get that money out without paying tax to South Africa and not pay tax to Israel. So, yeah.
Here's an interesting one that somebody made Aliyah in 1977. So going back, is somebody eligible to pay tax on those things? I mean, if you just have some retirement fund or some investment fund.
So I think, as I said before, look, if it's before 2001, they weren't tax resident in South Africa, so I wouldn't worry about that. But if they do still have retirement savings in South Africa, they should, I don't know why they would keep it here. To be honest, I don't know what they're keeping it for, but they should try and I would think that they would want. I'm not a financial advisor, but I would think that they would want access to that money, and they would just need to show that they've been. They need to prove that they're not tax resident in South Africa for the last 3 years, and then they would be able to go through a process with the company that has their money, like an Alexander Forbes, to get that. It does take some time. It's a lengthy process, a couple of months, but they would be able to get access to that money.
Raise your hand.
Okay, let's open up the Zoom to personal questions. I'm sure there are people who would like to ask a question personally. In the event that there are some questions that were sent on the chat and have not been answered, you can easily send them to Aviva and she will pass them on to Michael.
So someone actually asked a great question about common reporting standard and what's disclosed. I think that's often people are very interested in that. So they actually, report your what you received in your bank account, like inflows, balances, year-on-year balances, inflows, so are actually reported to SARS. So if an Israeli bank, would be, if they know that you've got a South African connection, they would be required to disclose the fact that you have an account with them, what your balance is with them, and any movement in that balance year on year inflows into that account over that period.
Hi, Mike.
Hi, how's it going?
Good, and you? My name's Lester. I've got a situation I'd like to quickly put down and see what you think about that. We made Aliyah in 2009. Then in 2017, we sold our property in Johannesburg and we moved the funds offshore. They invested offshore. Okay. I'm speaking to an accountant in Israel who has suggested that we haven't notified SARS, we haven't tax emigrated like everybody else. We didn't think it was necessary. And as you quite rightly say, it's becoming a very important thing to do. But the accountant feels that he wants to backdate it because I can show proof that I've been living offshore, working offshore. I've got all those documents. The accountant wants to backdate our not being a tax resident to 2017 when we sold the property. And he wants to do that to avoid any capital gains implications. And he's actually even suggested that if it's accepted by SARS, that SARS would owe me money for the years that I was assessed. Is this correct or not correct?
So I mean, it's quite hard, but all the full details. But when you say if years you assess, were you assessed from 2009 onwards, even though you were not in the country, or?
Yes, every year there was a SARS assessment. Money that was invested here on fixed interest rate at the banks and various other sources that I still had, but. We had left the country. We made Aliyah, as I said, in 2009. And I was working abroad. And so now we're trying to rectify all our affairs. And based on the relevant information, where I've been out the country since 2009, even though we did return here for family reasons, he feels that he wants to backdate it to 2017. That's when the property was sold and the money was moved offshore. And the assessment should be, he wants to have the assessment made at that point in time. And any tax paid subsequent to that, in fact, should be paid back to me, not being a resident.
So look, I can't talk on the exact circumstances. I need a bit more information, but what I can say, what you raise a good point, is that the timing of when you cease to be a resident is quite important. So, I mean, I don't know, he might have a better idea, but why doesn't he want to go back to 2009 when you actually left? You know, there might be, so I would look at it more closely, and, you know, you'd need to sort of do a calculation and see what your assets were in you got to pick, I'm saying you got to be a bit smart about it and pick a point of justifying when you cease to be resident at the timing that's optimal for minimizing that exit charge, and also minimizing the amount of tax you'd pay on your worldwide income. So, you know, you need to look at it in quite a bit more detail and do the numbers really, and say, like, what foreign income did you earn? Did you pay tax in South Africa on it? What date makes sense, basically? If it's fixed property in South Africa, just remember that you won't pay the exit charge on that fixed property. So there won't actually be an exit charge on that
Right.
house. Yeah.
You'll only have the capital gain when you actually sold it.
For the house, yeah. So,
Right.
You know, it would require quite a detailed analysis of just sort of working out what assets you actually held in 2009 and working out when is the best date really to argue that you cease to be South African tax resident.
Right. Thank you.
Pleasure.
Thank you. Is there anybody else who'd like to ask a personal question? So, Michael, I'm sure there's some more questions in the chat that you might want to.
Yeah, sure. I think the question is, how soon after Aliyah should one change your tax residency status? I would say as soon as possible, as soon as you can get that certificate from the Israeli tax authorities to say that you're tax resident in Israel. You know, as soon as you can get that certificate, I would encourage you to change your tax residency status. So as soon as possible, the sooner the better. But the key is to get that tax residency certificate from the Israeli tax authorities. I don't, from an admin perspective, I don't know how long that takes on the Israeli side, to be honest. Here's a question. Can you become a non-tax resident while retaining shares in South Africa and then sell them after to avoid the CGT? Yes, you can retain the shares in South Africa, even if you are non-tax resident. You don't have to dispose of your assets. That is possible, yes.
But you'll still have to pay the exit charge.
You'd still have to pay the exit charge on those assets on the date when you cease to be resident. That's right, yes. So yes, just because you become non-resident here doesn't mean you can't hold South African assets. You do have to notify the bank, your bank about it, but a lot of those restrictions, since they got rid of financial immigration, have changed. In the old days, you had a blocked account and there were limited things you could transact. You can't get credit in South Africa, for example, is one thing that's quite challenging if you're non-resident. But that's, you know, that's between you and your bank. It's not an offense that you haven't reported something to the tax authorities. That's a much more minor issue. And with getting rid of financial immigration or overhauling financial immigration, the bank has much less access to that. We financially immigrated and were taxed on taxing out our retirement savings. Kaylee, if you want to contact us, we can maybe help you and see whether when you withdrew your retirement savings, if you were non-resident at the time, and how we can fix that. Yeah, so please, yeah, be in touch. Let's see. A few years ago, I was told by SARS that we don't have to worry about financial immigration and tax issues if we earn less than $1 million a year, that they don't focus on people earning less than that. Is that true? You know, I can't say whether they will go for the big fish first and deal with the small fish later, but they are investing in AI and technology. There's been quite a big investment in that. so that they don't, so it's not manual anymore. And with this information that they are getting from the banks, that they're able to sort of raise assessments automatically. So, you know, it would seem to me that if they are investing in that and they're going to go that route, they're not going to just pick on the big people, they're going to pick on everybody. So they'll get information from a foreign bank to say that a South African taxpayer has earned foreign income. They'll see that the computer will see that there's no foreign income disclosed in your South African tax return, and immediately a letter will automatically be generated and go out asking you, you know, saying that an audit is underway and that asking you to rectify your return. So yeah, I think the 1 million was potentially about foreign salaries that were earned. There's an exemption on your worldwide income for foreign salaries that you earned, and that's only the first. It's gone up a little bit since the initially, but it was initially the first million of that foreign salary. But just because, yeah, unfortunately, I know that the burden is off it. The tax administration burden is high, even for people that aren't such big earners. But unfortunately, that's how it works. You have to adhere to the rules, even if you don't earn as much as other people. Someone asked how soon after Aliyah should one change their tax status. I already answered that. I would say as soon as you can get that Israeli tax residency certificate, we can help you do the declaration to SARS and change your tax status. Somebody asked, great, how do you become a taxpayer in Israel if you retired? You know, you'd have to actually ask an Israeli tax expert about that. You know, we sort of how you would approach the Israeli Revenue Authority. But I imagine even if you retired, it doesn't change your residency status, right? So you may not earn income in Israel, but you still tax resident. They're not related. So you can be tax resident in Israel, even if you earn no Israeli income. And I suspect that it would just be a registration process, an application to the Israeli tax authorities, even if you're earning no income in Israel, but you should check that with your Israeli accountant. Here's a question from Kaylee. If you make Aliyah and continue to be employed in South Africa, do you only pay tax in Israel, and can you financially immigrate? So this is a good question. And many people are in this situation. I've seen it around the 10-year tax holiday issue is if you have made Aliyah, but you keep your job in South Africa, but you're working remotely from Israel, is that South African income subject to tax in Israel? And our view is that it is actually subject to tax in Israel, not in South Africa. The double tax agreement with South Africa looks at this sort of scenario, and if you're not spending 183 days in South Africa, the money is actually taxed in Israel, and the 10-year tax holiday probably does not cover you for that. So the source of the income is actually where you deem to work, where you actually physically work. And if you are working remotely, but you are physically in Israel when you're performing the work, your source of that income is actually Israel, and you'd be subject to tax in Israel on that money and not in South Africa. It's a sort of question we get quite a lot, and we would argue that the 10-year tax holiday would not be applicable, and you would have to still pay tax in Israel during that 10-year tax holiday period. There are ways to maybe structure it to avoid that for those 10 years. We can chat about that if you want to contact us, setting up structures that avoid that. But if you're directly working and you're physically present in Israel, yeah, I think the correct legal position is that you should be paying tax in Israel on that money. Someone asked, Alon Berman, do you, Michael, offer the services in your business to sort this out? Yeah, we can help you do the declaration and change your tax status. If you want, you can contact us and we can help you with that with pleasure. Tony asked, if you make Aliyah but will not be earning a salary in Israel and living with income from South Africa, is it necessary to change your tax status? Yeah, so again, I think the key point to Tony is that where you earn your income doesn't define your tax status. So your tax status is determined by your physical presence, where you spend time, and also your ordinarily, where you connect.
You're domiciled, I guess.
Yeah, where you have a permanent home.
Where you're domiciled.
Your circumstances. And the fact that you earn no income in Israel may be a contributing factor, but it's not definitive by any means. So it's very possible that you may be non-resident in South Africa, but still be earning the bulk of your income in South Africa, and then you should still change your tax status. There may be a lot of advantages, especially also, so there definitely would be. It's not a question of advantages, but it's it is the correct situation. But I also think there are advantages. Sylvia had a question again. I think Sylvia and Myron's hands up again. I don't know if they want to ask another question. Or it's an old hand.
Sylvia, would you like to ask the question personally or write a question in the chat?
Somebody asked about the exit charge. They missed that and how it's calculated. So it's a deemed disposal for capital gains tax is how the exit charge is calculated. So it's basically you deem to have disposed on the day before you tax emigrated all of your worldwide assets, your South African and your worldwide assets, at the market rate at that date. You can subtract the cost, the base cost of those assets, and you calculate the gain, and that's included in your South African tax return, and you pay tax on it as though you would any other capital gain at the inclusion rate, and depending on the tax that the tax bracket you're in that year, that's how the tax will be calculated. So we can help you with that calculation as well if you need. Let's see.
Here's another question that somebody wants to know if they have a bank account in South Africa but have immigrated tax res, and are they taxed on the money? What are they asking? If you still have a bank,
you can keep your South African. As I said, you can keep your South African shares. You can keep your South African bank account. The major thing is if you inform the bank of it, they may move you to a non-res department, and they may give you the most biggest implication that you can't really have a credit card if you're non-resident. That's the biggest. But informing the bank is a minor thing. You should, but that's not SARS.
Wow. Okay, guys. I think that's about wraps it up. You must at least have a sip of water because we haven't given you a moment.
Firing on all cylinders.
Yeah. So thank you so much.
Have a lot of questions when it comes to tax.
What to do. So thank you so much for your time, your energy, your wealth of information, and also to Laura. So again, you really are a wealth of information, and people will be able to sort any of the issues that they may have.
Thank you very much for having us. And if people want to contact us, we can share our details. They're on the screen, but I'm sure we'll share it with an email with you guys. And we're happy to help from a South African perspective.
Good luck, and thank you. So thank you everybody for joining. Please check out the Telfed website for upcoming events, and we look forward to seeing you on another one of Telfed's wonderful events. Good night to everybody, and much health. Bye for now.
Thank you, Michael. Thank you so much, everyone. And the recording will be available from sometime tomorrow on the Telfed YouTube channel.
Thanks, everyone.
Thank you,
Bye-bye.
guys.
Thank you,
Thanks,
thank
good
you, Aviva. As usual, again, if anybody would like to volunteer or take part in a community event, please be in contact with Aviva via her email. Good night to all.